Now the crucial question on everyone's mind is whether we can still retire from Tesla stock as the stock price keeps falling and the world seems to be in turmoil. Doubts start creeping in. Can we rely on Tesla to turn things around? And if so, how many shares do we need at the current incredibly low prices? But you know what the silver lining is, that accumulating more shares is easier when the price is lower, giving us more value in the long run. So let's dive into these uncertain times. If you're already on board, click the like button, get some popcorn. And if you haven't subscribed yet, click the subscribe button now. Let's find out what it takes to retire comfortably and passively by 2030. Even in the midst of the chaos, let's take a moment to appreciate these low prices. Despite the volatility in the short term, many of us are in this for the long haul, with an eye towards that sweet retirement in 2030. By 2030, we need a passive monthly income of $6,000 or $72,000 annually to retire very comfortably. This calculation accounts for an annual inflation rate of 5% from 2022 to 2030. The big question is what will give us a 7% return by 2030. While some might consider holding on to Tesla and drawing from it, we can't be certain about its future returns. Now, some might argue that the inflation rate could be lower, but for the sake of caution, let's stick with this number to generate this income. We would need a 7% return on a $1 million investment. The S&P 500, on the other hand, has historically returned an average of about 10.5% per year over the past century, but let's be conservative and assume a return of 7% instead. Although selling Tesla might not be your first choice given the potential for higher returns, market fluctuations cannot be predicted with absolute certainty. Nevertheless, we must take into account the data we currently have. Although Tesla has been around for about 15 to 17 years, which is impressive, we can rely more on the S&P 500's 100-year track record for reliability. So if you want to retire comfortably by 2030, these are the qualifications you'll need. Also keep in mind that this plan should last you for at least 40 to 45 years. Now let's look at the various scenarios. In the extreme case, we're looking at 10 million vehicles sold by 2030, with an average selling price of $40,000. Gary Black predicts 48,000, but we're being more cautious and estimating 46,000. Which would generate revenue for vehicles of an astounding $400 billion, an operating margin of 20 and profits of $80 billion. For energy, we're estimating, with an operating margin of 20% and revenue close to $28 billion, assuming a 20% compound annual growth rate beginning in 2022, there would be over $5.5 billion in profits. Look over services. If we examine Tesla's first quarter of 2020 earnings, it has been expanding nicely and making a profit, so let's give it an operating margin of 20%. This would result in service profits of almost $8 billion, which is a significant portion of Tesla's revenue and profits in my opinion. In order to calculate the success, we must take into account the total revenue of $466 billion, the income of $93 billion, and the number of outstanding shares of 3.25 billion. Moving on to the bear case, things are a little different. We're looking at 50 million vehicles sold with an average selling price of $35,000. I've included a share buyback because dilution would make sense. The energy sector is expected to generate $60 billion in revenue. We're looking at revenue of over $600 billion, income of almost $124 billion, and an EPS of over 38, assuming a 25 compound annual growth rate for services with a 20 operating margin would produce about $8 billion in profits overall. Now let's discuss the base case. We're assuming 20 million vehicles are sold, even though I have my doubts. But hey, who knows, Tesla might just pull it off. The average selling price would be $30,000 and energy revenue would increase at a compound rate of 30% annually, reaching $47 billion, with an estimated $77 billion in service revenue and a total of more than $700 billion. EPS would be close to 46 and net income would be close to $145 billion. In the bull case, we're looking at 23 million vehicles sold each year at an average selling price of $28,000. Energy-related revenue would increase by 35% annually to $62 billion in service. Revenue would increase to almost $8 billion. This results in a total revenue of close to $800 billion, a net income of more than $150 billion, and an EPS of 48. Now for the ultra bull case, consider that 25 million vehicles were sold with an average selling price of $26,000. Energy revenue would soar to $80 billion, growing at an incredible 40% per year. This all adds up to a total revenue exceeding $800 billion and a net income of $176 billion and an EPS of over 51. Services would generate over $100 billion in revenue, which is astounding. Hold on to your seats as we examine the potential Tesla stock prices in 2030, ranging from the pessimistic ultra-bear case to the optimistic ultra-bull scenario. The ultra-bear case assumes a P/E ratio of 25, while the ultra-bull scenario is based on a P/E ratio of 15. Please remember that all of these predictions are just that, predictions and not facts, so take them with a grain of salt. Prepare for these staggering numbers in the ultra-bear case. Assuming the latter scenario, the base case forecasts a stock price of over $1,100 per share with a market cap exceeding $3.6 trillion in the majority. We could see Tesla stock soar above $1,200 per share with a market cap approaching $3.9 trillion. The stock price could reach an astounding $718 per share. Finally, in the risky ultra-bull scenario, the stock price could reach almost $1,300 per share, increasing the market cap to almost $4 trillion. Let's shift our attention to the number of Tesla shares needed to achieve financial freedom by 2030. These are truly impressive numbers that leave us in awe of Tesla's potential future trajectory. As we calculate the number of shares required at various stock prices to reach that coveted $1 million level, I hope you're prepared for the most exciting part. Mark, to achieve $1 million by 2030 in the ultra-bear case, you would need about 1,393 shares or a dollar value of $210,000. Keep in mind that we are basing this analysis on the current stock price of around $150 per share, so any fluctuations may affect the total value. When we moved up to the latter, we encountered the bear case where 1,040 each shares or a dollar value of overall $157,000 would be sufficient. And as you can see, this represents significant improvement requiring $50,000 less than the ultra-bear case. While $200,000 is no small sum, particularly during a recession, it sets the baseline for our calculations. As we advance towards our objective, let's examine the base case, which calls for 892 shares or a dollar value greater than $133,000. The bull casing requires 774 shares, which have a total market value of more than $160,000. Finally, in our bold ultra-bull scenario, just 726 shares, or about $108,900, would be required to start on the road to the $1 million goal. Milestone utilizing a bear case, the simplest case. Each case has its own requirements and potential outcomes, including the bull case and the ultra-bull case. Despite the stock price's high value and the intimidating ultra-bear case, the base case represents a more realistic option requiring a significant but attainable number of shares and a dollar value. It's better than the previous cases, but still not an easy feat, but with tenacity and faith in Tesla's growth potential, reaching your investment goals is possible. Now that the bear case is within reach, let's focus on the bull case, which represents a significantly higher stock price prediction. If the scenario materializes, there would be significant potential gains, even though a six-figure investment is still necessary, making it significantly better than the previous cases. Here, commitment and discipline are still crucial for success. The stock price increases even further despite the financial risk. Under this scenario, the return on investment could be 9 times greater by 2030. This is the ultra-bull case. While it's still not pocket change, it's a more practical choice than in the previous situations. It's important to keep in mind that not everyone can afford to invest a large sum of money, such as $100,000 all at once. This is why dollar cost averaging is so important. By making regular, small investments over time, you can reduce the risks associated with market fluctuations. Given the financial requirements, many investors believe that the opportunity presented by Tesla stock is the best of our lifetime. The six-figure investment required might deter some people, but let's experiment with the stock price now to determine how much you would need at various price points. This is not just one person's opinion. Even long-term investors, including those who have turned bearish, acknowledge Tesla's promising future once full self-driving is resolved. The market will shift in Tesla's favor. Remember, they face similar doubts. Decreasing the stock price significantly reduces the initial investment required. It's worth exploring different scenarios to see the possibilities. In conclusion, retiring comfortably with Tesla stock by 2030 is entirely possible. Thank you for watching, and make sure to like and subscribe and turn on bell notification for more content like this.